Good morning. Good morning of those that are joining us on the West Coast, and good afternoon, evening to those on the Eastern in Europe. Welcome to today's Bridge the Gap event, co-hosted between us, Plug and Play, and the National Association of Insurance Commissioners. Traditionally, this is one of the largest events of the year, and we're using the silver lining of everything going remote to expand this even further, with about 250 attendees registered to this event, including about 65 of those from the NAIC and New York Department of Financial Services also joining us today. The purpose of Bridge the Gap is to bring the relevant regulators together with the rest of our ecosystem, primarily startups and incumbents, to discuss emerging trends and topics, where as an ecosystem, we can move together to bring positive change. I think today's theme is especially relevant to that mission. And this year's topic is definitely no different. In recent years, the use of AI has become as common as the word SaaS or software as a service. And although there have been some great AI-based initiatives, there's also been coupled with some rather disappointing use cases. The last couple of years we've seen Apple being accused of gender discrimination when they launched their Apple Card due to the use of black box algorithms. Amazon axed their AI-enabled recruitment because it was found to be misogynistic. And most recently, Clearview has been attacked for its controversial use of facial recognition in policing, immigration, and other areas. Today, we've organized a great panel of regulators and academics who will discuss the issues of underrepresented data sets, black box algorithms, bias, and the future of responsible AI. This will then be followed by a set of presentations by three of our most promising startups in the space. Uniquely, to bridge the gap, after these presentations, we'll be breaking out into a networking session via the Remo platform. You should have all received a link to do this, and we'll also make sure that throughout and at the end of this, we'll remind you guys about the link and we'll put it in the chat as well. The platform's a great way to meet startups presenting, also connect with our attending regulators, and have open discussions around the use of AI. Quick bit of housekeeping before we get started. So firstly, we're going to be opening up to Q&A. So please feel free to use the Q&A button at the bottom of your window in Zoom. You can also use the chat feature for any general questions, comments, and queries. And we will remind everyone to please keep yourself muted unless you are presenting. So to start us up, I'd love to introduce my great friend and colleague, Tyler Lang, who will be hosting our panel today on responsible AI. Over to you, Tyler.
All right, there we go. All right, welcome everyone to our panel on our Bridge the Gap discussion. I'm Tyler Lang. I'm our Corporate Partnerships Manager for Plug and Play's InsurTech practice based here in North America. Thank you for joining us, and thank you to our panelists for joining us as well. So before we get started, before we get right into it, would love to just hear from our panelists, just a brief introduction of yourselves. Commissioner Gottfried, if we could start with you.
Yeah, thanks, Tyler. John Gottfried, I'm the Insurance Commissioner from North Dakota. I'm also the chair of the NAIC's Innovation and Technology Task Force, as well as the chair of the Artificial Intelligence Working Group, which put together the NAIC's Artificial Intelligence Principles. So I have been working in the space for, well, I've been a commissioner for about 3.5 years, coming up hopefully on 4, and then hopefully another 4 more. And this has been an area that's been really near and dear to my heart and something that I'm passionate about. Certainly wish we could be doing this in person, because this event is an annual event that I love to come to. I love to be at. The energy in the room is generally palpable, and so it's fun to get together with Plug and Play and the startups. But we'll have to save that for next year. But really looking forward to the discussion. Thanks, Tyler.
Thanks. Superintendent Dwyer.
Yes, thank you. My name is Beth Dwyer. I'm the Superintendent of Insurance in Rhode Island. I have been in this job for 5 years, but I was general counsel to the department for 15 before that. And I was in private practice in Southern California and Rhode Island before that. While at the NAIC, I've been vice chair of the Big Data Working Group, and I'm currently John's vice chair in the Innovation and Technology Task Force. And I think there's great promise in all of the things that are being created, both for consumers and for companies. And I'm very interested in all of it and glad to be here.
Miti, on to you.
Thank you. My name is Miti To, and I head the insurance division at New York DFS. I joined DFS 10 months ago. Feels like 10 years ago with everything that's happened this year. I've had the pleasure of working very closely with Matt Homer, who heads DFS's Research and Innovation division. And together we've been taking really a deep dive on all AI issues and really thinking about where our agency goes from here, building on circular letter number 1, which was issued last year. A pleasure to be here.
Fantastic, thanks. And James.
Thanks, Tyler. It's very nice to meet everyone. My name is James So. I am a professor at Stanford, where I lead a group working on developing AI algorithms. And in particular, we're very interested in developing AI algorithms that are accountable, that are explainable, and also fair. Right? So we've developed various methods for auditing, debiasing AI systems that have been quite widely used by many of the tech companies, including Google and others. And I'm also the faculty director for Stanford AI for Health, where we are very interested in applications, especially with insurance companies, and we're working closely with some of the larger insurance companies to deploy and to develop AI systems.
Fantastic. Thank you all so much. I want to get right into it just with the limited time that we have today. And James, I'd love to start with you and just kind of help us set the stage. So being as you're very much involved in the domain of artificial intelligence broadly, what is it? Where are we in its evolution? And why is it so especially relevant now for financial services?
Great, yes, thanks for the question. So I think as an AI researcher, it's certainly an extremely exciting field, right? And we're seeing that these AI systems being deployed in many insurance and financial applications. You know, some of the applications that we're specifically working on will be, let's say, using AI systems to automate the claims processing process, where it can greatly simplify and make the system more efficient. We've also been working with companies like Anthem, where we can use AI systems to improve the predictive models for risks and also for costs of specific members. And there are many other interesting applications where people are using AI systems both for like fraud detections in financial services, and also even to build like chatbots, right, as sort of intermediate customer service agents. So I think the whole area is really exciting and it's developing very quickly. I think it's actually quite important to understand what is the biggest difference, right, between the modern AI systems that are being deployed versus maybe some of the more standard software systems. And in my view, I think the biggest difference and also the biggest challenge that I would love to hear the other panelists do their feedback on is that the standard software systems, it's actually relatively easy to specify, right? So it's sort of a binary system that says, this actually meets this objective where it's designed to do. If it meets the objective, you can quickly check it and you know it's going to work relatively well. Right? Whereas for AI systems, at least the modern ones, it's very much evolving and learning systems. What that means is that the system that you see today is going to potentially be different from the system you see next month because it's trained on this feedback loop of additional data. Right? So that's actually leads to a host of new challenges of how do we monitor these AI systems, right? Because it's evolving over time, how do we audit them and how do we ensure that they're accountable and transparent and unbiased, especially as they're being deployed in such wide applications.
Absolutely. So certainly an evolving category of technology, you know, within financial services and more broadly. Any other thoughts from the panelists, maybe Miti, on emerging challenges or kind of, you know, how you've approached some of these evolving challenges within your scope?
Sure. Thank you for the question. I mean, the main challenge, as others have said earlier, really is the risk of, you know, unintentional discrimination produced by these models, even though on their face they don't, you know, take into account protected class information. So that's the challenge. The main challenge, been the challenge from the beginning since the regulatory community has started focusing on this a few years ago. And it's a heightened challenge, you know, in these days when issues of systemic racism and systemic social economic disparities in societies, you know, can be reflected in the data that's collected. So that remains the, you know, I think the main legal but business challenge. I mean, we really need to get this right. I would flag maybe related challenges that are practical. in terms of what we're grappling with at DFS. Number one is resources. We at DFS, at least currently, don't have the resources, the expertise to evaluate the models that James is talking about. We're doing a deep dive, as I said earlier, spending time with data scientists and other experts to try to understand better what we're talking about, so that we can think about, well, what is the best regulatory next step. But it's a resource issue. As James mentioned, these are models that evolve over time. That just puts an even further strain on the resource. So how can regulators, with the resources we have, support the industry's responsible development of these products, I think is a key question. And a related challenge, also practical, is, how do you measure disparate impact of models, AI tools, when insurers do not collect protected class data from their customers, and when consumers may not want to share that data. And that is, we are really scratching our heads on this one. This is a very important issue. There are some alternatives, proxies for trying to measure disparate impact. Using last name and zip codes is one apparently not uncommon method, which is itself has its own problems. Asking consumers to voluntarily disclose the information based on prior efforts, has not produced a lot of information. So those are some of the issues we're grappling with right now.
And Tyler, if I can jump in just a little bit, I think, we're at an evolving point of AI. I guess I'm an overly an optimist of it, but I think we're going to be, 5, 6, 8, 10, 12 years from now. Hopefully this has evolved to the point where it's the way, and we've solved a lot of these problems. And I think AI will be used to solve a lot of these problems. As has been mentioned, these things continue to evolve and they continue to learn. And so there should be an inherent opportunity there to weed out some of these bias issues that we're going to probably see in the beginning, because those machines, they should be able to learn and catch that as they evolve. The issue is doing it right on the front end. And that's where all of our work is done on the front end. I mean, and so, because as these things get set up and they continue to evolve and grow and change and learn, if you start with a bad product, you're going to end with a really bad product. And when you talk about the insurance industry, this isn't, gone are the days, in my opinion, of one bad underwriter who is making poor decisions that aren't in line with the company goals, or as a biased underwriter, and that he affects his book of business. When you apply an algorithm to your entire company or your entire book, you inherently impact all your consumers at that point. So the impact is so great, and that works as a pro and a con. I mean, this has an opportunity, I think, to, if we do it right and we do it in a responsible manner, we will get to those fair outcomes, those fair decisions, those ethical decisions on insurance cases. But the reason we put so much emphasis, I think, on the front end at the NAIC in developing the principles is because we know that work happens early, that work happens now. And I'll agree with Miti. I mean, if New York doesn't have the resources, I can assure you North Dakota doesn't have the resources to do this. And so it's going to be partnering with the AI auditors and the algorithm auditors, and how does that look? And is there a level of comfort there that we can get to as a regulator body? Because just like in the real world, there's a spectrum of people who understand technology and engage in technology. Same at the regulator level. We've got the handful of regulators that are here, probably at the Bridge the Gap meeting, are at least willing to learn and engage and want to learn more and want to do more. And we've also got other folks who focus on other areas and don't have either the bandwidth or the time to invest into innovation and technology. And so we're gonna have to be able to bridge that gap of getting them comfortable enough to where this is okay. And that's the work that we've done at the Innovation Technology Task Force and among other regulators to get that comfort level there. Because I also think that it's going to be unrealistic for us to get into every black box, get into every algorithm and understand that, because the minute we understand it, it changes. And we've got 15,000 different algorithms right now. The minute the minute we'll get to unpack and understand it, it's different, and we need to change it. So there's going to be a lot of emphasis put on the companies to do this work on the front end, there's going to be a need for a renewed sense of trust between the regulators and the companies to be able to bring this forward and say, we had a bad outcome. Our algorithm it gave us results that weren't expected. We've changed it. We've remediated the impact, but we're going to continue to move forward because ultimately the benefits, I think, are going to be massive for not only the insurance industry, but for, the globe. And that's what I'm continuing to focus on. We're going to be bumpy here for the next couple of years, certainly. But I think the outcome is going to be well worth the work that we're putting in.
I think that's a really interesting point. And Superintendent Dwyer, please.
I agree with everything that's been said, but let me bring up two things that I don't think have been addressed yet. One is, can consumers understand when AI is used in rating? Can consumers understand why their rate has changed? You would be surprised how many calls we get from people. There are things. Literally got a call yesterday. A guy got divorced and his auto rate went up. Sometimes when you're married, you get a lower rate. It's all sorts of things like that. So that's number one. How do we explain it to the consumer? And number two, does the insurer understand? I think especially with smaller insurers, sometimes they're buying something off the shelf. And do they understand what their rating is to a point that they make sure that there's protection in the solvency area? Other than that, I agree with everything that everyone else has said.
Interesting. So yeah, I feel like we're kind of brushing up on another theme that we were hoping to discuss, which is really the kind of regulators' role within artificial intelligence. And John, based on your comments, really acting as that kind of front ending a lot of the work on AI. And it sounds like to date, a lot of that work's been done in the frameworks and principles that you've developed with the NEIC. Maybe you could just spend a few minutes telling us about how you came to this, the principles, why it's important, and why now?
Well, one, I think we've seen AI growing in the insurance industry. It's growing in the financial services industry. It's growing in every sector, really. And I liken the insurance industry as generally the last mover for very good reason. The banking services industry has gone through a pretty significant technology change in the last 10, 15 years. And now we're getting to the point where the insurance industry is probably ready to take that on. About 18 months ago, we had a couple presentations in front of our regulator-only group and had some discussions about where AI is going and what some of the international groups are working on and how they're addressing some of these issues and some of the things that they're working on and the ethical use of AI. Out of that meeting, we formed the AI working group, which was, I think I got voluntold to chair that group as well. And from that point, we've been working on the AI principles with the goal of getting them done by the end of this year, and we've reached that goal. Now, the discussion around proxy discrimination certainly came to light, and it was certainly an elevated issue within the artificial intelligence principles. It's important to point out that discussion had been an underlying theme of the entire creation of those principles, right? I mean, that's the biggest threat of using artificial intelligence is the threat of proxy discrimination. Insurance has an interesting relationship with this because insurance is inherently a discriminatory industry. I mean, that's what we make choices, right? It's when it tips over to being unfair discrimination is when it becomes a problem. And so obviously the proxy discrimination discussion was going to be very well vetted through the group, and it came at a heightened time socially when we had some renewed emphasis on it, which I think was appropriate and good. But that also brought a lot of people to the table, which is always a good thing. So really it was driven out of the need, I think, to get in front of this as much as we could. We've seen the issues with the Apple Card and the Amazon hiring practices that everybody has seen. And to think somehow that the insurance industry is going to be insulated from that would be a little ridiculous. And so doing our very best to stay in front of it as much as we can and at least start putting the fence posts out for the insurance industry to say, here are our broad expectations. They're not laws, they're not regulations, but here are our very broad expectations. And if you're going to start using artificial intelligence, you better be looking at this. Because there's a wide range of companies like Superintendent Dwyer mentioned that are buying things off the shelf because it's the new thing to do. It's the new way to underwrite. It's a speedy way to do things. And our main point, I think, out of the principles is you better have, at the very least, board level understanding of what you're doing and have had the discussions about how are we protecting against proxy discrimination, how are we ensuring that this is compliant and ethical, how is it transparent, how are we monitoring this and using it in a consistent way, that you got to at least have those discussions at the front end, because otherwise you're going to get yourself down a road that can be pretty detrimental to your company and to your consumers.
Absolutely. And anyone else want to chime in? I'd be curious to hear, James, from your perspective, as we hear more about proxy discrimination as a huge issue within artificial intelligence, how your research and your work at Stanford has kind of reconciled for making sure that the high fidelity data lends as little issue as possible to unnecessary discrimination in the process.
Yeah, that's a great question. So we've been developing a few approaches to look at this problem. One is actually thinking about ways, how do we develop auditors, which are itself algorithms, but these are sort of auditing systems that can help human regulators or help the insurers to try to identify what are some potential discriminations or some potential biases in their systems. Right? And I think these auditing systems will become increasingly important going forward, especially for the reasons that other panelists mentioned, that you have thousands of algorithms. Each algorithm itself could be a huge black box with millions of parameters. It's just really not feasible for individual humans or regulators to continuously monitor what's going on in the systems. So our goal is to really can we actually design auditors that can help to alert to the humans, like what are the some of the most salient biases and salient challenges with any of the existing algorithms, right, to audit these black boxes. So I think that's really one promising area going forward from the research community. We have already released some initial versions of auditors that can use both in healthcare systems and also in various other applications. And the key idea there is when you try to audit an AI system, we should not just audit it for any specific objective. Right? It's actually important to audit it for multiple different objectives. That's what we're calling the multi-accuracy. So that means that we want to make sure that the algorithm works well for different subgroups, different subpopulations. And this is where one of the challenge that was brought up before is that what do we do when we don't have demographic features from the populations, right? And there we're trying to actually use some of these reverse proxies to say, okay, if we have zip code and other information, can we use those to try to identify some of the demographic factors and then to use that to audit the algorithms? So I think that's probably one type of technical approach that if we develop these systems to work together with humans to assist the human auditors, then that could be one way to look at these discriminations.
And are those systems operationalized largely? Are they more kind of research in academia and kind of at the more nascent stages?
Yeah, so I think we're really right at this cusp of the research is becoming more mature, and I think it's really at the cusp of being ready to potentially being piloted and being deployed in industry, in regulators with these different companies. So this is actually a really exciting time for these auditing approaches.
Yeah, absolutely. That's very interesting. And of course, AI is broader, and the applications are much broader than in just financial services. Has anyone on the panel seen a regulatory body from another industry setting a particularly high bar when it comes to regulating around AI? And might this be an opportunity for financial services? As you've developed these frameworks and really kind of want to front end a lot of the work before it could be implemented and then kind of get away from you. Miti, is that something that you've run into at all?
Yes, I mean, we have been looking at what other regulators have done in the insurance space and financial services at large. As Commissioner Gottfried said, there's insurance is the last mover, so unfortunately, there's nothing yet there. But on the banking side, there is the model risk management framework that applies to banks that's designed to minimize the risk of loss generated by the use of models. And that's an interesting approach for us to think about. And certainly it's focused on, front-ending the oversight and the review. Although, as James said, the intervention or the need for humans to be involved and be able to check that the the tool is performing as it should, and correct it if necessary remains. So that's an interesting model, I think, for us to think about.
Yeah, very,
I
very
can jump in, Tyler, just a little bit. We did a lot of, and me personally, I've done a lot of research and a lot of digging in the creation of the AI principles, what our international partners are doing, what kind of like service industries are doing. And we pulled a lot of what is in there from a lot of different, I guess I don't want to say we reinvented the wheel, but it's similar themes across many different industries on the fair and ethical, the compliant, the accurate, the transparent and safe, secure, and robust is kind of our theme. Those themes exist across, I would say, the globe. When you start talking about ethical AI, I don't think anybody's quite cracked the code yet on how to do it. But it's a consistent discussion that I think not only our consumers and the citizens of the world, on a broader step, are going to expect this to be an ethical process. They're going to expect it to be fair, and so the commitment to that is all throughout any ethical AI document, ethical principles or AI principles, anything that you see globally, domestically, they're very similar. It's similar to what James said. We're at the cusp, I think, of cracking that code and getting there and getting to what that means. And that'll be the next, hopefully it's less than 5 years, but next 5, 10, 12 years until we get that really solved.
And I think that there has been a hesitancy, and there should be a hesitancy for us to enact any statutes or regulations that are too prescriptive. I mean, what James is talking about the cutting edge, we certainly don't want to be unintentionally regulating out something that we feel is good for consumers. So I think there's always that hesitancy too. That we all want to protect consumers, but we're afraid of doing something that would actually have the opposite effect.
Sure. Yeah, it's about striking that very healthy balance, right? And so, I think a lot of our conversation is based around how large companies are working with AI in financial services. Of course, InsurTech has been a category that's exploded over the last 3 to 5 years. And there's a lot of startups focusing on insurance as a market for themselves. How does that kind of change the equation to you folks as regulators, in balancing that kind of upside versus the more kind of, downside or risk associated with, more startup solutions being plugged into incumbents off the shelf?
Well, I think there's a lot of opportunity in the startup community to do this because you're not encumbered by your legacy system. You don't have that legacy system behind you that you're trying to adapt into, mold into, either using a new process or using a new technology. And so it goes back again. I think that it's all that work on the front end. If you set it up right, there's going to be a significant amount of opportunity because you won't be encumbered by that long-standing legacy system. And how do we've invested dollars into this IT system and this mainframe system, if you want to call it that, over the years, and now we've got to try to extract all the data out of that and put it into whatever is something new. I think a lot of the larger carriers are facing that issue if not already, but they will face it. And so I think there's opportunity there for startups to really be in the front of it. The downside of the big huge risk though is if you get it wrong, that's gonna be wrong for everybody, right? I mean, it's gonna be bad for everybody in the community. That if a new tech company jumps out in front and gets this wrong, they'll be the example, and they will be this is why it didn't work, and all those things that come with that. And so it could really set the process back a significant amount of time, which is where I'm hopeful that we'll see a lot of collaboration between not only our large carriers, but also the startup community working together and trying to set up this framework and getting it right. Because the reality is the regulators aren't going to know. I mean, we're not going to, if you're waiting for us to sit and give you detailed prescriptive regulation on how this needs to be done, we're not going to get it right. We don't have that expertise. We don't have that ability, I think. And so it's going to be a collaborative effort across, all lines of the industry to do this the right way. And if we do it the right way, there's a significant amount of benefit, but obviously there's risk involved in that. And so I think there's a lot of opportunity there, but there's certainly some downside risk of doing it wrong.
So Tyler, if I could just jump off what John was just saying about the communication, what I found is sometimes we're not speaking the same language. So what we do is regulate insurance. And, a lot of the startups are just not, we tend to be attorneys and other types of things. So sometimes just sitting down and explaining, you might think that there's a law or regulation that's going to prevent you from doing something. And sometimes it's just the way we're talking. So if it's explained to us, we can sometimes determine that, well, that's really not a problem. And here's a way that we can check to make sure that there is compliance, or, just something like that. So sometimes I hear people talking about sandboxes a lot to be removed from regulation. A lot of times it's not necessary. It's just a conversation.
I could add to that. I agree with everything that has been said already. I think what we found with our DFS Fast Forward program, which we launched a few months ago, is really to increase the engagement and the dialogue with the InsurTech community to do exactly what Superintendent Dwyer just said, just making sure that we can translate to the extent necessary the innovative idea into the existing framework. Sometimes there are creative ways of making them fit. Other times it becomes obvious that a change might be necessary. And through the conversations we've been having over the last couple of months, I think we've identified some areas that would benefit from modernization. But in other cases, we were able to find a path forward without a lot of surgery necessary.
Absolutely. Always the preferred method rather than going under the knife. Well, folks, I want to thank you all so much for your time today. We're officially at time here. Really have enjoyed the conversation. John, Beth, Meeti, James, thank you so much. And I want to pass it over to Nick Daly for the rest of our event here today.
As mentioned, now we'll be delving down into those kind of 3 startups that we selected for today. Each startup is going to have 5 minutes to pitch, followed by 1 minute of Q&A. Please feel free to use the Q&A feature within Zoom. I'll do my best to get all your questions across to the founders, and we hope to get everything answered for you. There'll also be an opportunity to connect with the founders afterwards. So after each one, there will be a poll that will essentially say, do you want to connect with the founder? And if it's a yes, then what we'll look to do is we'll connect you straight after the event, so you guys can take that onto another level of conversation. So first up, we'll be looking with Fiddler Labs, an explainable and operational AI tool helping enterprise organizations to unlock the AI black box for more trustable AI experiences. With that, I'd love to welcome Krishna from Fiddler Labs to the stage.
Thank you, Nick. Thanks everyone for spending the time to know about Fiddler. I'm the founder CEO of Fiddler. Let me share my screen. So at Fiddler, our mission is to build trust into AI. And so we started a couple of years ago. In the past couple of years, we've built a pluggable platform that helps AI ML teams to continuously monitor and explain their AI models in production. And the problem we are trying to solve is, as machine learning teams are putting models into production, they are flying blind. We've seen the news of TikTok transparency issues that hurt the acquisition deal because of the black box algorithms. We have seen the news around how coronavirus pandemic has caught AI teams off guard. Many of the supply chain models, credit risk models, hiring models, lots of AI models were stale, and they needed to be retrained continuously because the baseline kept changing. We also heard the news about bias in models increasingly, from whether that's Apple credit card or, United Healthcare, racial bias issues in the last few months. And then, as we all know, in certain industries, non-compliant models can lead to huge litigation. These are some of the challenges that we actually helped solve prior to this. I was an engineering leader at Facebook. I was building an explainable AI platform for Facebook, especially after the 2016 elections, to increase the transparency of our AI models powering applications like Newsfeed. So aspects like why you're seeing a particular story, why a particular recommendation is coming, why a particular news story is going viral. With that insight, I started the company, and we're trying to solve this problem of creating visibility, monitoring, and explanations across machine learning models deployed in production. So with the help of Fiddler, business users can trust their AI application. So, for example, a user working on wealth management, the capital allocation model can predict cash distribution. The business user can really understand why it's making certain predictions. Customer support teams can reason about why a particular user might be getting a particular complaint about a model's decision. Operations teams can continuously monitor these models and debug how they're working. Regulators can make sure that the models are making fair decisions. So the question that we are trying to answer is, are you confident about your AI performance? When you deploy your machine learning models, do you have the necessary visibility? Are they running as accurate as they were trained before? Do they have any inherent bias in them? Are you tracking them? Are they compliant? And that's what we are trying to solve. We're bringing a new paradigm of monitoring system. We call it explainable monitoring. It helps you what's happening and why is it happening with your models. Gives you complete visibility across your models, helps you track performance and bias, helps you explain the models at any given point of time. You can essentially plug it into your existing ML workflow. You don't need to change anything. If you're using any of these modeling frameworks, TensorFlow, PyTorch, H2O, MLflow, or any of the data sources, you can essentially attach Fiddler to continuously monitor predictions and explain them. Here's a sneak peek of how this looks like. So here's a lending model that's being monitored by Fiddler. It's monitoring the decisions that the lending model is making, how many loans were approved, how many loans were unapproved. It's monitoring the accuracy of the model over time. It's looking into drift in predictions over time. For example, how was the predictions over time? Are they dropping or increasing? What is the prediction drift compared to a training set? Which features are actually drifting over time? Right, and how much are they contributing to the model drift? In this case, interest rate, number of accounts open in the past 24 months, debt to income ratio are some of the most important features that are drifting, and they also have a high impact on the model. So this is where we include explainability of the model, so we can actually understand how the particular feature is able to impact the model performance and prediction. Similarly, when your models are making predictions, they may have some certain outliers, certain very low risk loans or high risk loans that they may be predicting. And in those cases, you may want to understand why a particular loan prediction was made that way. So Fiddler essentially integrates explainability into your monitoring paradigm. So you can actually look at an outlier and actually explain it right there. So for example, in this case, this person got a 44% risk probability. You can essentially know what factors have caused that prediction to be like that. In this case, interest rate had a 34% contribution on the credit risk. Accounts open, number of accounts open in the past 24 months at 10%. Now I can actually fiddle with the inputs. That's hence the name Fiddler. So I can say, what if this person actually had 5 accounts open? Or what if we price the interest rate to 12%? You can see the real time, the prediction changes. You can then reason about, when you make these changes, what would have the model predicted if the person was priced at 12% interest rate and he had only 5 accounts open. This gives you this amazing power of being able to monitor your AI and explain it in a continuous manner. The system works seamlessly across different types of models. You may have NLP models that may be looking at customer sentiment. Fiddler can explain those NLP models so that you can actually know which words are causing, sentiment, sentiment review issues. And if you have churn models that are you're trying to use to understand why a particular user is churning, Fiddler can integrate with those models and then explain the model and show you factors, what causes a particular user to churn and how can you prevent someone from churning. And so this is essentially how you would bring in the way to integrate Fiddler is you bring in your model artifact and your data set, and we have a pluggable model and data ingestion system. And then what we offer to the customers is ability to monitor, analyze, and control your AI in production. And you can essentially get this entire experience through our product user experience. We also can connect to your APIs as well. And we have live customers that are using our product. A popular recruiting company in the Bay Area uses Fiddler for monitoring models that they're making on SageMaker and TensorFlow for bias and performance issues, and then sort of explaining decisions to the different stakeholders. We are a platform that can run on both on-prem and cloud. And we're working with two of the largest banks to create a centralized model monitoring and validation system today. And we are widely recognized as an industry leader in this field. We have partnerships with AWS, Facebook AI. We are already a cool vendor in the enterprise AI governance space. So that's it. I mean, so we are here to help. If you have any questions, I'm happy to answer. We're happy to help you build responsible AI in your organization.
Thank you, Krishna. I appreciate that. Maybe just one quick question that we have. Is there any limitation to the types of models Fiddler can explain and monitor?
That's a great question. So today we support TensorFlow, Scikit, PyTorch, XGBoost models out of the box. We also have a container-based approach that we are making that can help us integrate, H2O models, Spark models that are not necessarily, interpretable by Fiddler itself. And then with respect to monitoring, we can monitor any models because essentially we're looking at the inputs and outputs.
Fantastic. Appreciate that. Thank you very much for your time.
Great.
Awesome. Next up, we have Calypso. They're looking to solve the all-important issue of how do we build trust in AI systems. Their tools sit at the cutting edge of AI capabilities, allowing organizations to unpack the black box and ensure that it's cyber secure. With that, welcome to
Perfect, thanks. Yeah, so let me just open my screen here. So we're Calypso, and what we're really looking to do here is, build trust in machine learning. So machine learning, unlike pure play software development, is enormously hard to debug. Unlike pure play software, you can't just use your typical software-defined lifecycle tools. Instead, we like to think that debugging AI is sort of like, the Super Bowl of debugging. And at Calypso, what we're really focused on is how do you debug your machine learning models? How do you make sure that they're secure against adversarial machine learning attacks? And how do you interpret what's going on in your machine learning models? For quick background on us and quick background on the company, our number one market segment is inside of the US government and inside of the US military, where right now we work with the Navy, we work with the Air Force, we work with the Army, and we work with a number of other customers kind of around the US government space. And they're using Calypso, our capabilities and our technology to help them trust machine learning models that they're using in high risk, high criticality situations where it's critical to be able to understand how a model works, how reliable is it, and prior to actually deploying a model into production where you could have life-altering effects, ensuring that there is that VV and I for machine learning, so that verification and validation for machine learning models. We're a team of 30 now, and we've been expanding kind of our scope from the government space into financial services, where we've really, and insurance, where what we've really been looking at is, with this new paradigm of kind of ensuring AI, what does it look like to kind of provide the VV solution for that? And we do that pretty simply through, both our trusted AI framework, which is compliant with the new kind of NIST standards that are coming out in the AI space, the DoD AI ethics standards, as well as the ISO and the EU ethics in AI standards that are coming out in the space. And then we back up that understanding of all of the standards in the space with our commercial software and our commercial product, Vesper. And what Vesper is it's an end-to-end tool that enables you to audit machine learning models from data ingress to final model verification, validate and verify all of the models that you've developed, have security gates, so make sure that your models are actually secure and can't easily get hacked, have insight into your models, as well as make sure that you're training your models in the right way. And when we really think about our company within the insurtech kind of space, what we're really thinking about is as you go to deploy models into production and you're thinking about bias in models, as you're thinking about both the transparency and the trustworthiness of models, how can you ensure the integrity of your models? And how do you make sure that you have the ability to generate reporting on how your model works, the security vulnerabilities of your model, as well as how compliant it is with some of the kind of new standards that are starting to emerge within the broad-based space of AI trust. And fundamentally, what we're really looking to do and what we're really looking to accomplish is to, better enable you to actually kind of cross that trust chasm and actually go from, building machine learning models in a kind of a R&D setting to deploying machine learning into production. Perfect.
Thank you very much, Neil. I appreciate that. Firstly, congratulations on the recent fundraise. I saw that announced a month or two ago, so congrats. We got one question for you. So one question is, what are some of the applications you've seen of verification and validation in the insurance sector?
Yeah, that's a really good question. We're seeing a couple really interesting applications. One is on the kind of AI insurance side of the house, where if you're going to insure someone's AI model, you need a solution that can ensure the integrity of that model and can actually provide you reporting on those models. And thanks to all of our government work in what's called T&E, so basically testing and evaluating AI models for procurement, it happens to be a really, really kind of nice starting point for providing evaluation and kind of verification in the insurance vertical.
Interesting. And I would love to learn a little bit more about the use cases you've been working on in the military and government. What kind of work have you been doing with them, and how does that maybe transfer over to financial services?
Sure. So, there are a couple ways that it really transfers over. One, whenever you're talking about applications of technology inside of the government and inside of the military more specifically, you're really talking about needing a level of technical sophistication and code-based sophistication that's quite similar to financial services. When you're dealing with life and death, your code bases need to be rock solid, which is enormously helpful from the perspective of actually deploying into any sort of test environment or into any sort of production environment. And then on the government side of the house, there's a huge focus on external model validation and verification, which is sort of similar to the concept of making sure that as you deploy models in financial services and insurtech, how do you make sure that those models are trustworthy, and how can you actually ensure the integrity of vendors that are going to deploy production models on your systems?
Very interesting. I appreciate that, Neil, and hope you'll be joining us for a bit of the networking next up. So anyone who wants to connect with Neil, I recommend doing that or via the poll. Awesome. Thank you very much.
Thanks so much.
Last but by no means least, we have Berlin-based and recent Y Combinator graduate Taktile. Their platform is enabling enterprises to maximize their machine learning ROI by enabling data scientists, as well as other roles within the enterprise, to productionize models and ensure that they're being used responsibly. Mike, over to you.
Thank you so much, Nick. Thanks for introducing us, and thank you for inviting, to the whole Plug and Play team, inviting us to the conference. So I'm going to share my screen. Maybe you can give me a brief sign if everything is working.
I think you're all good.
All right, perfect. So I am Mike. I'm the CEO and co-founder of Taktile. And Taktile makes it easy for data scientists and actuaries to turn their API models into production-grade applications. But this is not the only thing that we do. We merely stop there. So what we also do is we ensure that your models behave responsibly. In order to show you how that works, I brought today a machine learning model, which is a fraud detection model from one of our former insurance clients. And I'm going to show you now how our platform works. So here I have the model right now on my laptop, and I'm going to take it and I'm going to push it to our platform. So I'm going to start the deployment right now. And while this is going, I'm going to go back to the presentation to tell you more about what we do, but we will come back to this a little bit later. So my co-founder Max and I, we built up another company before that, which is a data science consultancy company, about 100 employees at the moment, and we work mainly for large-scale insurance companies. We build very customized machine learning models, so risk models, churn prediction models, like fraud detection models, like customer lifetime value models. So whatever it is, you can imagine. And like one thing that we've like observed over and over again was that all of these insurance companies, they believe in the value of AI, and they believe that it's critically important to their business, even as of today. Also, so do we believe that because we've built these models. But on the other hand, like many of these companies don't really have seen a good return on invest on the AI applications. And I mean, in general, insurance is a perfect playground for machine learning because you get great data sets that have like a very, very like high quality. And even if you increase profits, like even if you increase the margins by a little bit, you have like high profit increasements. So what has happened that none of these, let's say, ML models are being really making their way into the industry. So we see two main reasons actually. The one is that many of our clients did not dare to switch their production systems from easily explainable linear models to more complex model techniques, even if they were more accurate. So one needs to say that business leaders, they actually like don't have the trust into like their systems to move AI prototypes to production. And second, putting them into work really costs you lots of engineering resources. And we all know that for big insurance companies, you never have enough IT capacities. So for us, let me now go back to our platform to show you what the model was doing while I was talking. So while I was showing you the slides, our model, which was on my laptop before, was deployed to a microservice, was tested thoroughly, and which is here, right there. So we got here the insurance fraud case that I was talking about. Here, this is deployed 5 minutes ago. You can see it on the green dot. And now you actually got everything you need that you like need in order to like really use it in the daily business. As this conference is about responsible AI, I would love to show you like two things that our platform does. The one thing is testing. So we really want to make sure that no bad model ever gets deployed. And this, on the one hand, is about like testing the data, testing the accuracy of the model, the plausibility, integration tests, so very technical stuff. But on the other hand, it's also very important like to check for example, in this case, discrimination. So we're checking here in the difference in false positive rate for males and females. This one has passed, it's green, it's acceptable. We're also checking for the spread in mean predicted fraud rate between males and females, which is also acceptable. I mean, I totally acknowledge that like these tests are not easy to generalize over like different states and different insurance companies. So we give you the opportunity to define the tests on your own. This is only an example. Then on the second hand, I would also love to show you some of our explainability features. So here we're predicting fraud, as said. Can take a look at these at the model. What we do here is like we show you the most important variables that have an influence if someone has committed fraud. For example, we can see it's the incident severity and the insured hobbies. We now take a look at the hobbies. You can see, well, mainly, apparently, people playing chess have a high probability of committing a fraudulent claim. So this, in a nutshell, wanted to show you the Taktile platform. I would love to take some questions now. Would also love to connect with you later and give you a little bit more insight on what we're doing.
Thank you very much, Mike. Appreciate it. We've had a few conversations recently. Super excited what you guys are building, and obviously, I think you guys have the right background for it as well. One question we have, is building on the test that you just showed. Do you also provide your users the possibility to output these into compliance related reports?
Yes, we actually do. Am I still? No, I'm not on the screen anymore, right?
I
No,
think you might be off the screen now.
I might have. You kick me off. That's fine. So actually, I would have showed. So what we do is, especially for regulated industries, it's super important to have that audit trail. So what we do is for every model, every algorithm that has ever been committed, we create a compliance report. It shows you who built the model, who signed off the model, who was involved in like explaining the model, and this is all over time aggregated in a database, and you can always take a look at it, either for like internal compliance or for the auditor or the regulator. So this is something what like especially our banking and insurance clients have asked for a lot, and this is why we've implemented that.
Fantastic. No, I appreciate that. It's really useful. Awesome. Thank you, Mike. Hopefully you'll be joining us in the networking as well.
Yeah, I stick around.
People.
Fantastic.
Thank you. So to close up, firstly, I'd say thank you for everyone joining us. Been incredible to see so many people engage on this topic. I'd also like to quickly say some thank yous to our fantastic panelists from the NAIC, Department of Financial Services in New York, Stanford, and of course the founders who've been sharing their visions and how they're tackling the issue of responsible AI. I'd also like to thank the team behind the scenes at Plug and Play, who've been putting this all together amazingly and been many a week of work here. I'd also like to encourage anyone to join us on the Remo platform next, where we'll be having a kind of exclusive networking session with the founders, with the panelists, and all others. All the details are in the chat, and looking forward to having you there. See you soon.